Today, Bitcoin rises to near record highs even as key U.S. economic data is delayed by the government shutdown. Bitfury's George Kikvadze discusses where prices are headed and shares his view on the future of Bitcoin mining. And Crypto World explores how small businesses are adopting stablecoins and potentially changing the way you pay in stores. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies are on the rise as we head into the weekend after the U.S. government shutdown delayed the release of the September jobs report. By noon Eastern, Bitcoin climbed nearly 2% to above $122,000, inching closer to its all-time high above $124,000. Ether rose more than 2%, and Solana gained more than 3% to about $235. Now, over the past 7 days, Bitcoin and Ether rose about 12% after trading in the red last week. As of noon, Bitcoin and Ether were on pace for their first weekly gain in 3, and Solana was up 17% for the week, also on track for its first weekly gain in 3. Separately, we're keeping an eye on shares of Walmart after CNBC learned that OnePay, the fintech firm majority owned by Walmart, will soon offer crypto trading and custody through its app. You can check out that full story over at CNBC.com. All right, for more on markets, this afternoon I sat down with George Kikvadze, Executive Vice Chairman of blockchain services firm Bitfury and founder of Cryptic 8 Ventures. He's an early believer in Bitcoin and discussed the evolution of the cryptocurrency over the past decade. A lot has happened with crypto, especially this week. I mean, we started the week off with Bitcoin around $109,000, and here we are at the end of the week, and we just checked prices around $12.30, and we saw Bitcoin above $123,000. So how do you explain what's going on this week? I mean, we haven't really gotten any new economic data. We were supposed to get the jobs report today, and with the government shutdown, that didn't happen. So the last piece of economic data that we got was private payrolls. We saw a decline, the biggest decline in 2.5 years. So how do the macro factors play into what's happening with Bitcoin right now, and what other factors are at play?
Yeah, I mean, ever since I got into Bitcoin at sort of a $20, it was always a bet against the irresponsibility of governments and printing a lot of money by central banks. So it's always been an insurance against that. And what we're seeing now is that, yes, there is a government shutdown, but Bitcoin works 24/7. It never shuts down. And I think there's also realization that at some point the interest rates will have to come down because there is a slowdown. And as such, it's a risk-on assets. And from that standpoint, Bitcoin always shines. So I think people are pricing that in. And we have October, which is always Uptober. So we're in a good spot.
And we're in striking distance of Bitcoin's recent all-time high reached back in August above $124,000.
Yes.
Do you think we can surpass that all-time high? And if so, can we stay there? What will it take?
For me, it's a directional bet. So we're going to 1 million, and after that, we're going to 10 million. So it's just a matter of time. From that standpoint, I'm taking a long-term view. And everyone, I've been advising people to get into Bitcoin at $20, $200, $20,000 and $120,000, because at the end of the day, it is a scarce value. It's a digital gold and has all the properties to be anti-inflationary and anti sort of a centralized government spending. So it's a directional bet.
And you always believed in Bitcoin. I mean, we spoke with you. CNBC Squawk Box interviewed you back in 2014
Correct.
when the price of Bitcoin was around $450.
Correct.
And here we are with Bitcoin above $120,000.
Correct.
So how do you explain what happened between then and now in the 11 years since that interview?
Well, I think first and foremost, the global debt of the governments has increased dramatically. The continuation of spending by OECD countries has continued on, and the central banks quantitative easing and printing, releasing more fiat. And when you have all of this combination of factors, then you have Bitcoin shining. That's one. Second, it has been institutional adoption. So I think what BlackRock has done for the industry has been profound, and Fidelity in terms of allowing the access to Bitcoin in a very easy manner, because that was not the case before. And we're seeing this institutional wave that kind of got unleashed when Paul Tudor Jones wrote the article in support of Bitcoin. For me, that was an aha moment, and I knew that that would start a major institutional avalanche. And now we're in a great spot, and Bitcoin's future is very bright.
Going back to that interview in 2014, you discussed the fundamentals of Bitcoin when, 2014, Bitcoin
Yes.
was a pretty new industry.
Yes.
You believed in it since the get-go.
Yes.
And so I'm wondering, at the time of that interview, you were showing this chip.
Yes.
And you said that the chip wasn't going to be in existence in around 9 months from that
Correct.
interview because of how fast the industry was
Correct.
evolving.
Yes.
So what have you seen between then and now in terms of the development of Bitcoin and the industry at large?
Yeah, so that chip went on to mine close to 1 million Bitcoins in the industry. That was the workhorse, for us, and one of the most successful ventures. The issue with, or let's say the focus of the Bitcoin miners is you always got to stay ahead of the wave and always got to be innovating, always got to be driving the technology. And what we've seen is over the last 10 years, the field became so much more capital intensive, where you need to raise a lot of capital to deploy the data centers and to always stay ahead of the competition. And what we're seeing now is few of the Bitcoin miners are transitioning to the AI HPC play, and they're doing extremely well. And we are fortunate to have backed Hot 8, which used to be Bitfury Canada, and Cypher Mining, which used to be Bitfury USA. And both of those stories are, going very, very strong with thousands of megawatts under their belt and transitioning to ride the AI HPC wave. So I'm very bullish.
Expanding on that, Bitfury obviously is also in the AI space now.
Correct.
Before it was only mining Bitcoin.
Mm-hmm.
And we're seeing a lot of that with other Bitcoin miners, as you noted.
Yes.
CleanSpark, Bitfarms, those are some examples.
Yes.
But do you think we'll see any more pure play Bitcoin miners, or do they almost have to move into AI in order to compete, especially as Bitcoin rewards are declining?
Correct. I mean, you see right now a huge push from the hyperscalers coming in and bidding for the energy. And Cypher, for example, was very fortunate 5 years ago to be one of the first large entities in Texas securing this energy sort of a contracts, and now sort of it's capitalizing on all of this. I think Bitcoin mining will definitely play a role, but given the massive race for the AGI, I think that will become a big part of the pie and big part of the growth story. And both Hot and Cypher are sitting very pretty in that.
Now, going back to that interview in
Yes.
2014, at the time, Bitfury was mining 40% of
Correct.
the Bitcoin in circulation.
Yes.
And as you noted, now there's a lot of competition. There are a
Correct.
lot of other Bitcoin miners out there. So where is Bitfury now in that regard, and how has competition changed the game for you?
Yeah, so Bitfury incubated Hot 8 and Cypher, and we hold equity stakes in those companies. They have both superb management and growth projections. Bitfury itself also incubated a European top chip maker company called Accelera that designs the chip, so we're playing through that. And we have one project in chip making in a stealth mode, and hopefully in a couple of years' times we'll announce. And if the material science checks out on that and we'll get good results, I think that will be the next wave of Bitcoin mining and AI chip technology that we'll be very happy to present to the market.
Now, Kikvadze also breaks down crypto VC trends and regulatory advancements for digital assets in the U.S. You'll be able to check out that full interview over at cnbc.com/Crypto World. Okay, let's talk about the rise of stablecoins for our main story. This summer marked some major advancements for this part of the crypto industry. It kicked off with USDC issuer Circle's blockbuster IPO and finished with the passage of the Genius Act, which set rules of the road for stablecoins pegged to the US dollar. Now these cryptocurrencies could start showing up in some unexpected places. Crypto World's Christian Nunley explains.
I am Wade Preston, co-founder of Prevail Coffee. Prevail Coffee is a specialty coffee brand. We are a roaster and micro importer that also has 4 retail locations, 2 in Atlanta, 1 in Montgomery, and 1 in Birmingham. And we work directly with farmers all across the globe to do direct trade partnerships of high-quality specialty coffee.
Wade's global coffee work led him to learn more about blockchain technology and how it could positively impact his business and others like it, as well as further global financial inclusion.
As I got further and further into understanding the problems with the global coffee trade and the way that so many of the financial tools that we take for granted here in developed economies, things like risk mitigation, capital formation, cash flow smoothing, they're just non-existent in the developing world. That's when I discovered blockchain, and it created the solutions to all the problems I was seeing. It also created opportunities for small businesses that are getting increasingly pinched out of capital markets here in the US as well.
Prevail Coffee is joining a mounting list of large and small US businesses looking to crypto to cut down on fees and potentially give customers a whole new way to back their favorite brand. Fees are a major cost for merchants. Say a customer buys a book from a bookstore using a Visa card issued by a random bank. That store then faces several middlemen before getting paid. An acquirer or third-party bank talks to the merchant and the VisaNet payment network. The network talks to the customer's bank, then back through the cycle before reaching the original bookstore to receive payment. All along the way, fees are collected at multiple points. Stablecoins can simply be sent from a customer's wallet to the merchant's.
There's tremendous potential in stablecoins. It is one that should disrupt to some extent the traditional payment space we have today with credit and debit cards, because it has the promise of faster, cheaper, more efficient, and frankly more convenient transactions for consumers and businesses.
Just think about companies that have a very slim profit margin. So maybe they're making, let's say 5%, 10% profit margin on the products they sell. Credit card fees can be like 3 to 4%. So you're talking about half of their earnings.
Visa and MasterCard are two of the biggest players in the payment infrastructure space. Industry insiders have called on more competition to help merchants cut down on transaction processing fees, like the record $187 billion paid in 2024. For a small business like Prevail, those fees add up quickly.
If credit card transaction fees were an employee in my business, they would be by far the highest paid employee in our business. So, credit card networks and banks are making more money off of small businesses than the people who actually build and contribute to the success of those small businesses.
Visa says the fees are necessary to support safe transactions.
If this interchange did not exist, right, the consumer's bank would find it very difficult to cover the cost it incurs for operating the card services like fraud prevention, delinquencies, systems maintenance, customer call centers, etc., etc.
Even as Visa says those fees are necessary to facilitate traditional payments, Prevail is piloting an app to help customers pay with stablecoins using Coinbase's base platform. It's a way for the coffee company to cut down on those business costs.
We've created the Drip Payment app, which plugs directly into Square POS using the APIs that Square allows, and people can open up the mobile app and they can onboard pretty seamlessly from their debit card right into stablecoins, dollar for dollar, using the base chain, and then they can use the app just like a normal mobile payment app to order coffee.
The idea of integrating new technology in the midst of everyday small business owners is exciting, right? To have more accessibility, to integrate it into my daily life. I think that's the potential that we have going forward. And I just want to see more opportunities where that could be prevalent.
Now, of course, there is a fee-free way for merchants to accept money right now, cash. A survey from the Federal Reserve released in May 2025 found that around 80% of US consumers held cash for at least one day of the month. But that survey also found that digital payments are growing. US consumers made an average of 11 payments per month using a mobile phone in 2024, up from 4 payments per month in 2018. As mobile payments become more common, stablecoins could be that low-fee way to pay.
Now, Christian also explores how many international entrepreneurs have already embraced stablecoins and could provide a blueprint for U.S. small business owners. You can check out that full video over at cnbc.com/cryptoworld as well. Okay, that's all for this week. We'll be back again on Monday, and we'll see you then.